Hello all, I hope you are all doing good. Please like the videos as well as subscribe. Today's topic is about fundamental analysis of ITC. So just let's start with the business units are the products which ITC is managing. Just yeah, as you can see here, these are all the main six business units of ITC. So first one is actually as you must be knowing already cigarettes. So in India, 77% of the cigarettes which are sold are actually manufactured by ITC, and even the margin is really good in ITC. It's kind of cash cow to ITC Limited. So there is always a threat to cigarette business in all over the world. People have actually started getting educated, and also they are becoming more and more health conscious. That's why the number of smokers are keep on reducing every year, and also some of the governments are also thinking of banning them, because of that the threat always there. So by identifying this, ITC started venturing into different businesses. They started with hotel business long back, and they've started world class hotels all across India. And also maybe in 20-25 years back they also got into this FMCG business. So once the cigarette business is closed, or maybe by there's a threat by government, so now ITC has actually built different businesses, which is even the cigarette business is not there, so the ITC will be able to survive. So the second unit is FMCG. It is the biggest. It's almost the revenue wise almost at par and little bit lesser than cigarette business. So FMCG, in FMCG, a lot of products. The brand size, some of them I already given here. First one is Ashirwad, and few of the famous ones are actually Sunfeast, Engage, Mangaldeep, Uvel, and all these uh, famous brands. So if you go to ITC website and try to check the product catalog, so you can see all these brands. So it's a huge business to ITC after cigarette. And third one is actually hotels business. As I said, I think hotels business is kind of it needs a lot of cash, if you're going to own the uh, hotels. That's why you need to build the hotels first. You need to buy the land. So ITC actually spent a lot of money on that. That was also actually one of the complaint by all the shareholders. I think nowadays, so it has changed the strategy. Instead of owning or building the own hotels, so it's actually tying up with already existing properties, and it's kind of asset light model it's going. That's why I think shareholders are also happy now. So the new money is not going to building hotels. Whatever they already started, now they're going to complete, I think, on the way of completing. Another good news is, so they also agreed to demerge this hotel business. So I think 40% of the shareholding of the ITC new ITC hotels will be still with ITC, but at least 60% of the shares will be distributed to the ITC shareholders. So that's why, I mean, if you're holding 10 shares of ITC, you're going to get one share. This is the demerger ratio. So that means first thing is they have stopped putting a lot of new money there, because the profitability is very less in hotels. If you have got your own hotels, that too, I mean, after COVID it's little bit improved. Otherwise, if you see in the beginning, the hotel rooms rate and all is very less compared to the property. I think the world class hotels what it is built, so that the profitability was not there. That's why there was always a complaint. So in case of agri, the fourth business is agriculture business. So ITC actually has got a very good tie up with all the farmers. So it's also giving the seeds and other things, and also it's helping to grow a lot of things. For example, potatoes for the bingo chips, as well as the tobacco leaves, tea, and all those things. It's really good, doing good here, and they're also exporting a lot of agriculture products like wheat, rice, this tobacco leaf, and all those things. So this I2C Infotech, again, it's a small business compared to the overall business. So it is mainly concentrating on this software related part. So it's also, I mean, during COVID time and other and next few years, it was, I mean, was also showing very good revenue, but it's not a big business, compared to the FMCG or the cigarette business. And the last one is the papers and packaging. So it is also, you would have seen this Classmate brand or paper craft brands of books and other things. So it's also kind of leader here, and also it is kind of an internal synergy. As you can see here, I have given this circle, so they will support one another. For example, Agri is also helping the products to producing FMCG products, and also, it's also it's packaging and paper business unit is helping to, package these products and other things. It's kind of all these things are interlinked. That's why I think ITC has got a very good synergy here. So this is the, part about the business units or the products. Next is, what is the whether ITC has got any business mode or competitive advantage. So here actually, as I was saying, 77% of the cigarettes which are sold in India are actually produced by ITC, and also it's kind of a monopoly. So since you cannot advertise legally, it is banned to advertise cigarettes in any of the TV channels or somewhere. That's why I think even if the new company comes up, so since there is no advertisement, they cannot, compete, and also they cannot uh, survive here. Another thing is, I think ITC also doing, a lot of innovations, and they are also getting into new kinds of, cigarette brands, so that to keep in the competitive, that keeping the competitive things in the market. As you can see, these are all the recent introduction what ITC has done. And also, ITC also started into exporting, the tobacco leaves as well as uh, nicotine. This is mainly used, e-cigarettes and all. So there is a manufacturing plant in Mysore for ITC for manufacturing these nicotine products. In case of FMCG, good thing about ITC compared to Unilever and all is, so they've got their own manufacturing plants, as well as, so they've got a very good tie-up with farmers to produce the quality, raw materials needed for, FMCG products. And also packaging and all is actually kind of, come from the paper and packaging business unit. So that's why, it's kind of always ITC has got an advantage. Yeah, next one is also, ITC is actually in terms of FMCG, Unilever are there almost like some 30, 40, 50 years. So that's why they've got a margin of around 25%. But ITC started, the FMCG business recently, maybe some 20 years. That's why, to build a brand, it's not so easy. That's why it's almost, needs a lot of advertisement and other things. So now only I think the margin expansion is started. Every year I think their what management is saying, it's going to expand by 1%. Currently it's almost like 10%. So if it goes up, then definitely it's going to create a lot of revenue as well as profit to ITC. So agriculture and packaging, as I said already, it's direct collaboration with farmers, and also, in agriculture. So ITC is also exporting a lot of rice, tobacco leaves, and wheat and other things. In terms of financials, as you can see, it's a very great company. It is almost, you can see the revenue. It is kind of keep on multiplying. So we are in now 2024 financial year. It's almost reached 70,000. Because of the cigarette business, as I said, there is a very good profit margin, almost 38%. You can see, I mean, even if I open a company, I think 38% achieving margin is not so easy. Only few businesses will have this kind of advantages. That's why it's, I mean, this is one of the very good business. And, profit also, it's keep on going up here. As you can see, I mean, this year, this financial year, it is almost earned, I think, 16.22 earnings per share. So it's also going up. If the margin is going up here, even the EPS will also start going up. So this is about financials. Similarly, if we come to, segmental wise revenue. So cigarette is dominating here. If you see, this is the last quarter result. So it's almost like 7,600, and the next actually was is in the FMCG business, 5,200. What else is, as I said, it's small, and also agribusiness is also kind of small. And paper and packaging, it's almost doing 2,000 crores. As I said, this is the margin expansion what I was talking about. It's almost reaching 11% in the quarter two. So this is really, really good news actually. So promoter holding, there's no real promoter. It's actually kind of, it is with kind of distributed. So the major shareholder is actually from the, there is one British company, BAT. So that is holding 23.9%. It is a major shareholder, but actually it is, it's kind of FII, not the Indian company. That's why, government is also not so encouraging for any FIIs to own a lot of shares. So since this is, I think ITC is there from last more than 100 years. This is actually, this shareholding is there from 30 years. So that's also one reason ITC cannot do the buyback. If they do the buyback, the this bad companies shareholding will increase. So that will indirectly means that ITC is kind of owned by them, kind of thing. That's why government does not want that. So there is always a kind of tug of war is happening. So the next shareholders are LIC, it's holding 15.22, and also the government is also owning. It's called SUTI, Specified Undertaking of Unit Trust of India. So this is also kind of almost in a dilemma. They will be, whenever they need money, they will keep selling these shares. So other than that, if you see here, it is distributed among different companies. So there is no real, promoter kind of thing. So in terms of valuation, as you can see here, ITC is still undervalued. Stock P is still 28.2. If you compare, just to give an example, HUL PU is 58.6. So if you see now 16 is the current EPS. So we can just for a calculation, even if you give a given a P of 55, 55 into, for example, 16.2, the shareholding should be already in 891 rupees. So you can also see here. So even historically, if you see also, ITC will almost trading at 30 to 35 PE. But even if you give 35, also 35 into 16 is, it should be 560, it should trade. So it means it is undervalued. And one good thing about is this one is the EPS is kind of, it's kind of expanding now because of this FMCG margin expansion. So it is kind of exploding. You can see here it is keep on going up and up. So because of these, definitely, this is still undervalued compared to HUL. But I'm not sure whether the market will give that much of valuation. But FMCG is turning around. This is the right time even if you want to invest. And also another good thing is dividend yield. So this is currently it is giving 2.8, and in the next slide I also show you that it's almost like dividend is going up and up every year. So actually, this is the 2019 and 20 ITC has made a change the dividend policy. Now they said that okay, 80 to 85% of the profit what they get after the tax will be distributed. They're following this policy. As you can see, I mean, this is what they have paid actually. They almost like paid 15.75 or something last financial year, and they will also pay this much. 16 is the dividend, sorry, earning per share as of now. So even the next financial year also you should get at least 14 to 15 dividend, and this will also keep going up. So if you are almost at 40 or 50 years age, and if you are thinking of building a dividend income, this is the right company. The because of the FMCG margin expansion as well as cigarette business, the revenue as well as profit will keep on going up. So then dividend of course will also be increasing. So then if you are now current dividend rate is 2.8%. So if you keep buying it in a SIP mode, and if you leave it for 10 years or 15 years, that time definitely just in dividend you're going to get almost like 10% of the yield. Yeah. So I mean, I was always till now I was always talking the positives. There are also, of course, there are some negatives. As I said, actually, these are all, there is no promoter holding, and it's managed by professionals. So professional means right. So I mean, of course, there is a accountability and all by shareholders in every shareholders meeting, and all they will be asking the right questions. But there is a big difference. If there is one company, for example, Adani or Birla or somebody owning 70 to 75% of the shareholding, then definitely they will try to push and try to get more profit. But in this case, it's not so. This is managed by professionals, and also in terms of salary wise, I think they're also uh, salary wise also it's more comparatively, and also they are diluting shares here in ESOPs. So it's already too much equity is there currently. 1248 crores shares there in the market. So you want to earn 1 rupee of earnings per share, so it has to earn 1248 crores rupees. So here this is one of the uh, how many in financial year 22 there were 220 people who are earning more than 1 crore salary. That is one thing, and also there are a lot of dilution is happening by ESOPs. And also, I mean, as I said, they changed the policy now. Of course, I mean, earlier they were also too much money they were putting into the hotel business. That was also wrong decision. But now it is changed. They've gone to asset light model. That's why this kind of issue is not there. These are all the negatives what I can think of. So in terms of recommendations, so as you can see here, there is also BOB Capital Markets. So it has given a buy call when the share price was at 455. So for a target of 523, and also Motilal Oswal has given a target of 535. When Prabhudas Leeladhar has given a target of 492. As you can see, I mean, even Axis Direct has given a target of 540. So everything is not at the current price. Everything is almost more than the current price. So conclusion is, yeah, of course, ITC is a very good business. So it's the revenue as well as the profit will keep on increasing. So I would definitely recommend you, if you are just looking for a uh, profit of 15 to 20%, it can easily generate. In addition to this, you will always be getting a regular income in terms of dividend. So my recommendation is, please uh, buy it. But only thing is, I'm not a SEBI registered analyst. That's why you should also consult your financial advisor before taking a decision. I hope this video helped you. Please subscribe and support, and also if you like the content of the video, and like it, so that YouTube also recommend to different people. Yeah, see you in the next video. Thanks. Bye.